The committee's decision was underpinned by the need to sustain the progress made so far towards achieving low and stable inflation. The MPC reaffirmed its commitment to a data-driven assessment of developments and outlook to guide future policy decisions. The committee welcomed the continued deceleration in headline inflation year on year in October 2025 for the 7th consecutive month. This favorable development resulted from several factors, including sustained monetary policy tightening, stable exchange rate, increased capital flows, and surplus current account balance. In addition, the relative stability in the price of premium motor spirit, PMS, and improved food supply supported the pace of disinflation. However, headline inflation remains high at double digit, requiring sustained efforts towards moderating it further. The committee was, therefore, of the view that the steady deceleration in inflation across the three measures, headline, core, and food, in October 2025 suggests that the lagged impact of previous tight policy measures is expected to continue in the near term. Thus, maintaining the current stance of policy amidst lingering global uncertainties would allow the effects of previous policy rate hikes to sufficiently transmit to the real economy and further reduce prices. Members noted that the robust performance of the external sector, evidenced by the surplus current account balance and steady accretion to reserves, which have contributed to stability in the exchange rate and moderation in inflation. The MPC also commended the collaborative effort of both the fiscal and monetary authorities, which led to the recent upgrade of Nigeria's sovereign credit rating by major credit rating agencies and the delisting of the country from the FATF grey list. Members also acknowledged the substantial progress in the ongoing recapitalization program, with 16 banks achieving full compliance with the revised capital requirements. Food inflation fell significantly to 13.12% in October 2025 from 16.87% in the preceding month, reflecting improved domestic food supply, stable exchange rates, and base effect. Similarly, core inflation slowed to 18.69% year-on-year in October 2025 from 19.53% in the preceding month, owing largely to a decline in the price of furnishing and household maintenance. Real gross domestic product, GDP, for the second quarter of 2025 sustained its positive trajectory, evidenced by the growth rate of 4.23% year-on-year, compared with 3.13% in the first quarter of 2025. Gross external reserves increased by 9.19%, reaching a high of $46.70 billion on November 14, 2025, from $42.77 billion at the end of September 2025, sufficient to cover 10.3 months of import for goods and services. Global developments. Global outlook is projected to recover in the near to medium term, underpinned by improved trade negotiations, accommodative monetary policy, especially in advanced economies, and easing geopolitical tensions. In addition, the ongoing seasonal harvest cycle is expected to boost local food supply and further moderate food prices. The MPC reaffirmed its commitment to evidence-based policy approach towards achieving the bank's mandate of price and financial system stability.
I'm Nancy Naji, Moneyline with Nancy on AIT. Governor, by this time last year, headline inflation was at around, I think, about 34%, if I'm not mistaken, around 34.6% peak at November last year, to where it is right now, around 16.05%, as we've been told by the MBS. For many Nigerians, they are still not feeling the relief of this inflation. And Governor, we have to tell you and your team this, because this is actually what we hear from Nigerians that we speak to. They are not yet feeling the relief of this inflation and the macro gains. As housing costs, rents, I'm sure you all know, rents even here in Abuja, across the country, people are paying rents in excess of 100%, 200%, 300%. My question then is, as a monetary authority, how is the Central Bank of Nigeria ensuring that the macro stability gains that we have been getting, at least in the last 1 year, translates into real and tangible relief for most vulnerable Nigerians and households? Thank you, sir.
Thank you very much, Nancy. Yes, you're absolutely right. Happily, the macro is looking a lot better. And you've identified it quite rightly that inflation has come down steadily. You're right, this time last year we're talking of 34 plus, and now we're down to 16. Now, I think, to your point, the issue of macro stability and the gains of macro stability. To my mind, this is the core of the matter, that to the extent that we have accomplished stability, stability is a very fundamental process in the road to growth. You recall, year and a half, 2 years ago, there was a lot of instability in our markets. And when there's instability, those who would normally invest hold, they stay away. Now we have moved from a situation where there is stability, and after stability comes investment, and after investment comes growth. And by the way, investment and growth could go hand in hand. They could, because it depends on which sectors you are looking at. And if you look at the sectors, you will see that over the course of the last couple of quarters, there has been growth. There has been. But the fact that we are now accomplishing stability gives greater confidence to investors who ultimately will invest, and so the growth and some of the issues you are talking about now become issues that are easily taken care of. What we don't need is anything that is short-term and cannot be sustained.
Mr. Governor, sir, Nigeria's external reserve now stands at $46.7 billion. And this is the highest in about 7 years. So, to you, Mr. Governor, what are the principles driving this growth, this accretion to the foreign reserve? And how does this compare with the reserve adequacy you consider optimal for Nigeria's external buffer, especially in the light of recent shocks?
Thank you very much. Well, firstly, let me answer the second question with respect to buffers and where we are on that. Right now, we're about 10 months import cover. And that is a good place. And to be frank, it is even more than it appears. It's more than it appears because you have a situation where there's significant liquidity within the market that unless you're a regular follower of these events, you may not see. So while we see that the results have gone up, respectively, there's definitely a lot more that surrounds that. Now, in terms of what have driven this, well, clearly we can see that, and it's something I've said in previous MPC meetings, that with a more competitive currency, you have a situation where there's more exports. There's a drive for greater exports, and that's why you find that is increasingly being the case for non-oil exports. Of course, we also know that for the oil exports, there have been increasing production, and we have come a long way from where we previously were on that particular line. Then, of course, you go to the IMTOs, the international remittances. All those have gone up relatively positively. And the good thing about all this is that we are building the reserves on a very systemic basis. Of course, because of the reforms that we are undertaking, portfolio investors are finding investment in Nigeria attractive, and they are coming to invest. For those of you who will remember how markets used to operate in those days, if the CBN does not intervene, nothing happens. That is now a thing of the past. We have a market that is open, that is transparent, and that plays in accordance with certain rules that everybody has signed up to. So these are all the things that have contributed to the way and manner in which our foreign exchange market operates, and which we have had stability in that market. You're right with respect to the differentials in foreign exchange rate, which is now down to about 2%. And if you recall, at one point in time when we started, it was more like about 60%. Now we've gone through to a situation, we've crossed that bridge where few people don't make differences in the foreign exchange at the expense of others. Everybody has equal access to a market that has become very, very open and very transparent, and where there's willing buyer and willing seller, and you're free to come in and leave as you like. So these are some of the things that have definitely contributed to that. It's a more disciplined market. It's a far more disciplined market. There's policy consistency there's an avoidance of policy flip-flops so that those who are part of that market understand where things are going to, they can predict, and they can plan. But it's a moving target. It doesn't stop. And with trust and respect comes confidence. Confidence doesn't come without trust or respect. Confidence comes from being transparent, from being open, from being honest, and from having consistency in policies. That is what attracts confidence. So for me, I would say that what we have done so far, we will continue to do and even deepen and ensure that anything that stands in the way of getting towards the goal of creating confidence, that we root it out. That we root it out. So, to my mind, this all plays into what I've been speaking about with respect to transparency of a central bank and the need for us to be able to ensure that at all times we get the confidence of people, we have the confidence of institutions, we have the confidence of all the foreign actors, the economic actors. They've got to understand the things we're doing. They've got to know that the decisions we make are decisions in the best interest of all Nigerians. And it is something that we will continue to do. Other than that, if you want to know more, please come to that event.
Thank you for your time.